Assalamualaikum and hi. We are from group 9 and this is our video for the group assignment. We are given the topic of Grand Thornton and Patisserie Valerie. There are 5 of us and please enjoy the video.
Let me begin our presentation by making a summary of the case of Grand Thornton v. Patisserie Valerie. In October 2018, Patisserie Holdings announced that its board had been notified of potential fraudulent accounting irregularities. The company subsequently entered into administration, leading to the closure of 70 stores and more than 900 job losses. The collapse follows the discovery of a huge black hole in the firm's account, eventually valued at €94 million. The liquidators at FRP Advisory filed a suit against Grand Thornton, claiming the auditor was negligent. On 26 September 2021, Grand Thornton has lost the case.
Next, violations of Auditor's Code of Conduct. As professional auditor, Mr. Newstead has violated the Institute of Chartered Accountants in England and Wales ICAEW Code of Ethics Section 130 Professional Competence and Due Care. If this case happened in Malaysia, we are not using ICAEW Code of Conduct. Instead, we're gonna use MIA Code of Conduct with the same section stated. Mr. Newstead should comply with the fundamental principle, professional competence and due care, to maintain professional knowledge and skill at the level required to ensure that a client or employer receive competent professional services. Based on paragraph 130.1b of the ICAEW Code of Ethics, the principle of professional competence and due care imposes the following obligations on all professional accountants: to act diligently in accordance with the applicable technical and professional standards when providing professional services.
Auditors may be held civilly liable by clients and third parties who use audit financial statement. Among the cause of legal action against auditors under the common law are gross negligence, where the auditor of Patisserie Valerie have been fined cause of a serious lack of competence. This was led to the collapse of the cafe chain as a result of the accounting scandal. Due to that, the causal relationship between the auditor and the plaintiff became damaged. Not only that, the plaintiff suffered some loss and damage due to the case. Then, the auditor failing to discover a material error or employee fraud. There was a fraud, for instance, right before the year end. There were receipts that are over 40 times higher than the average monthly receipt. Grand Thornton failed to question this large receipt.
The next point is about lessons learned from an auditor's perspective. It requires the auditor to gain the reasonable assurance as to whether the annual financial statements as a whole are free from the material misstatements, whether due to the fraud or errors, and then to enable the auditor to express an opinion on whether the annual financial statements are in accordance with all the material methods and applicable accounting framework. It also requires the auditor to prepare a report on the financial statements and then to report as required by the International Standards on Auditing (ISE) in accordance with the auditor's findings.